Trying to push past 734-ish. Volume's coming in. It's looking good. It's on the 1 minute chart. Drop this down a little bit here. Yep. Nice volume coming in. We're in power hour 236. We're going to head straight into after hours. This thing should fly pretty well. We've got some previous resistance, some supply on the daily here. This is going to have to chop through a little bit. Where are we at? So right now, 750. It's gonna get a little bit of resistance as it tries to push up through that. Once we hit 890, so almost $9, it's gonna be twice as hard. There's gonna be twice the supply there, and then once we push up through that, there's gonna be more. So coming into after hours, the bid and the ask spread will be a lot wider, so we should be able to jump past this, pass through these strong supply zones here, and then once we hit 14, this thing will ease up quite a bit, and it just keeps getting easier. And once we pass, a lot of potential here, Previous high of 117. Let's take a look here. Draw some lines past there while we're just kind of waiting for this thing to go. Not saying it's going to go this high. This isn't financial advice by any means. I'm not a financial advisor. Just love trading these penny stock, really strong momentum plays. Because we have so little information on the daily, I'm drawing the highs here off of these wicks, because even right here we've got a $5 gap. So other traders will be trading off similar zones. And let me change up one of these. Oh yeah, there we go. Let's go ahead and drop it to the 1 hour. Yep, right. And this whole area here just opens right up. Check my volume profile here because this might be a little bit off. Oh, I see. Okay. Do 5 day, 5 minutes. Yeah, we shot straight up here pretty quickly, but once we hit this supply zone up here, it got slapped back down. So we'll see this chew through here. This is on a 5 minute chart. Just looking at the daily here, trying to get an idea of what kind of supply zones we're hitting, resistance we're gonna run into. And right about in here, this 750, we've moved up pretty quick from 623 up to 760, but there was a little supply in there, so we moved up pretty fast without many sellers hitting the tape. So now that we've made it close to 756-ish level, uh, it's almost going to triple the supply here, and then almost quadruple when we get here, and so on and so forth. So we've got a tough grind to go through. But the advantage that we have, if you're trading this, I don't have any positions on this, but if you're trading this, going into after hours, could see some really nice movement because of the lower liquidity. It's my understanding algorithms do not trade pre-market and after hours, and so you won't get a lot of that. There still are a lot of short traders that trade in after hours and pre-market, but there does seem to be quite a bit of a drop off, unless it's something like GME or AMC historically, when you would see a lot of short sales going on both pre-market and after hours. But we seem to be kind of, I wouldn't say topping out yet. Not until we start rolling over is would I be concerned if I were in this. Let's draw some lines here so we can get an idea of where we are going. It's about down here. My cursor does not like to work with me. This is Thinkorswim, so I'm not. It's a little bit harder to kind of draw some lines out. So let's see. Where is it at? Look at my Moomoo real quick. There is a lot of short interest, especially from yesterday, which is kind of confusing. I'm not sure why. I mean, this was on the way down. It was trending down. That could be part of the reason why we're spiking up. Man, I'm really pushing my internet here. Over here, we have the time and sales. This kind of gives me an idea. You know, if you just see a constant sea of red, that's going to be a lot of selling. Let's take a look here. Let's see if we can do it by the tick. Well, changing your time frames to the tick does change some of your drawings. It changes kind of the way things look. It just does not want to. Interesting. I haven't seen that before. Okay, so it gives you a little bit a slightly different perspective. There are a lot of your professional traders trade on a 4,000 tick with certain like your SPY, QQQ. They do trade blue chips as well. The 4,000 tick can work on a lot of different tickers, even for some penny stocks. But what we're trying to do, obviously, is figure out what are the other traders trading off of. So I'm just going to stick to the 1 minute for now, so we can kind of get an idea of the volume and price action, because we're starting to see volume fade off quite a bit here. You know, the volume kind of fades off. It's the great thing here about one of the good things about Thinkorswim. Not everything is great about the TD Ameritrade Thinkorswim app, but you can draw lines in your volume profile here, so you can see where we start to kind of, come on, you can do it. Let's use this one. You can see where the volume's starting to fade off. Now, if we do like we did here and push right past, pushed right past. I had a lot of volume coming in. Uh, Typically, with this kind of a chart, you this might be just me. I don't have a whole lot to prove what I'm about to say, other than just watching price action for years. This almost seems like either algos picked up or um, someone with a lot of money, funds, and I don't mean just one. I mean, there are hedge funds, multi-million, billion-dollar funds, where a lot of their maybe newer traders will trade these penny stocks. If there's an opportunity to make money, then why not? And the video that I posted, I think it was last week on SMB Capital is a perfect example. So you'll get these guys that'll come in and they'll trade off of this dip because this is clearly on a trend line upwards. But once they tap, once your trend line starts to kind of break the structure, then you might see a flush. This is the 1 minute chart. I'm looking for maybe this kind of candle here. How much did we go? We went from, this is a low float. So if someone who's playing with $100,000 and they're buying up 10,000, let's take a look over here. These 1,000 shares, they might set a bid for say 10,000 shares, maybe in this area here or up here at the top. They might top tick this upper trend line where they know that an existing supply zone exists. So they might put, instead of putting their sell order for 250,000 shares, and they won't put a 250,000 sell order out there. Typically, they'll slowly start to sell off in increments here. But if they know the supply zone up here is coming up, they might just start dumping shares in this area here when they know that your traders that trade the break will push up in anticipating the break and sell in this area here. So you might see 10,000 share orders over here on the tape. It takes a lot of practice, and but it's so worth it to be able to watch the level 2 data down here. See, right now these are just 1,000 shares sitting on the bid and on the ask. So I see some support here, or I did at the $7 range. Let's see. So this is picking up. So let's redraw our lines. It's starting to curl over. So traders might be, this isn't exactly a dip off the trend line, but maybe you've got one here. And if you'll notice something, once the price action starts to break previous resistance and it retests support and starts to dip and curl upwards, now you have a trend line forming. And so we've got the first dip into that trend line that creates an upwards trend. And now you're starting with the second dip. And this is important to be aware of. How many dips have we had off of this trend line? Because once you get to that third dip, you might see a lot of selling happen, either at that third dip or once it tops out. After that third touch and a top out, you might see a lot of selling, and then it won't be long after that when it breaks support. And when we're trying to figure out where to get out, yeah, if you even think like that, the mentality for a lot of new traders and why a lot of traders lose money is they don't think about where should I start scaling out, where should I start getting out. A lot of new traders just think, man, this could go higher. This could go to 117. This could do this. The likelihood of that happening is almost zero in this kind of a market with tomorrow's CPI data coming up. And for the most part, a lot of your penny stocks, traders don't care about CPI data. These low float penny stocks don't care about CPI data because the traders will still trade them because they're low float. They can get in, they can get out, and make a lot of money in doing so. Because on typical blue chip stocks, you only see 10, maybe 15 cents in a move that's planned and calculated by someone with a lot of money. Whereas these penny stocks, you'll get a dollar move out of it easily. Take a look at this first bounce here, $6 all the way up to 7.13. So they might just be trading the meat of the move up here. So you want to be realistic about your expectations and price action. You see here, volume is dramatically slowing down. We went from this is a good sign. When these 1 minute candles closed, volume, a lot of green volume, and I like this particular type of buy and sell volume on Thinkorswim because on most of your other trading platforms, you only see green or red. You don't see the two colors separated. And I've kind of set this up for the thicker bars because I want to see the green behind the scene if there is. If there's more red than green, like here, then there were more sellers than buyers. But in this particular 60 seconds, this candle, there were almost twice as many buyers as there were sellers. So that that's important, and I'm kind of surprised that more trading platforms don't have that type of a volume indicator. You can see we're trading nicely off of this this trend line here, but you've got this is starting to come up to some supply in here. The volume's still very slow. I'll take that back. I had that scrolled all the way down. All right, let's see here. Let's see what we can see. Massive selling here, 25. This is like reading matrix code. It helps to watch the 1 minute chart here. Watch this trade. Right next to the time and sales. What I like to look for in the time and sales are uh, the amount of shares being sold. These are all these numbers are times 100. I believe that's right. Big seller. What we're looking at right now is very important on the smaller scale trades, day trading, because if you're trying to figure out when to get out, some people don't have the ability to watch these trades, all the way up from the bottom here. But if you can, you really need to, because it'll help you kind of identify where are people going to start dumping and getting out. We know that our supply zone is up here, and we've got a 756 to 770, almost a 20-cent gap. And it's going to have to, it's almost like we're just trying to make it to after hours. We're so close. We got 5 minutes left, and we'll see what happens in 5 minutes. But this is good to see. A lot of buying coming in. Things are still kind of slowing down. And down here, you don't see any major walls of sellers. You've got one at 720. Let's see where they've got that 720. I should be able to chew right through that, no problem. When you're looking at price action and the candles, the chart, you just kind of want to get an idea where are your lines at? Where do these wicks, where are most of these wicks? You know, what levels are they at? If I could draw a rectangle from here around in here, see these wicks that top out here? That's sellers coming in and slamming it down. Sellers could be short sellers, or it could be trap supply as a common term. See, we're pushing through this already, so that's good. Got nice strong movements. Working through the price action. I'm going to come down here. I'm going to change. You always constantly want to be updating your chart, drawing your lines, getting an idea where is it going, what are traders trading off of. If you don't keep a firm stop loss, and a lot of traders don't, they keep a mental stop loss. So if this candle closes, yeah, we might be breaking through trend here, breaking down past our trend line, but this candle hasn't closed. And again, this is still on the 1 minute. And the wicks will push down below it, but I would bet that when this candle actually closes, we either close right here or a little bit above this trend line. And hopefully it'll close in the green. Because when you change to a 5 minute, this candle's green right now. And a lot of traders, I would say a good majority of them, trade off of the 5 minute. And so when you're, oh, come on. When you're trying to figure out, you know, what are traders trading, you'll notice that a lot of traders will make a decision once that 5 minute candle closes. So the previous candle was red. Okay. So let's go back to the 1 minute. Okay, so this candle closed above the trend line. We're about to finish. There we go. So that closed green. What does our 5 minute look like? Still green. We're almost there. 1 minute left. 1 minute left. Volume's fading out. And don't be surprised if this thing flushes out right at the close. They might have been in this trade from way before. They don't want to be in here after hours. They want to get out. And at the very last second, you'll see a ton of orders come through here of people trying to get out, close their trade, take their profits, and they're done for the day. Nope, staying in. That's good. 14,000 share. No, more than that. Probably 140,000. I need to find out how much. So now the real trading begins, in my opinion. Where do we go from here? We've got to break 768, but once we break that, then we enter this grind zone where a lot of supply is, but it's going to be easier to move up. When you look down here at the bid and the ask, we've got a 1 cent difference. So that's not, okay, here we go. Now we have a 10 cent difference. So the spread is starting to get a little bit wider apart, which means that now the price is going to jump in one direction or another pretty quickly. And it could easily go back and forth. Um, but we're seeing more green. I'm really just looking for the thousands. Anything over 1,000 are the numbers I'm kind of looking at over here in the time and sales. Get to give me kind of an idea. Are traders taking profits? Are they or are they short selling it? Um, you can see we're bouncing back and forth between a previous line of resistance and this trend line. And at some point, we're going to meet up right in this area over here, which is going to force the price action to make a decision. And that decision can be it's going to be down or up. Usually, you'll see a push one way or another, either right at to that point or before we get there. So I think the news is good, the volume is good. You know, you kind of in this market, you couldn't ask for a better trade right now. And when I first saw in the chat the posting of the information, um, props to Jägermeister, Master Hunter. I think we were more over here when I first saw it, and so I knew there was not a whole lot of risk versus reward. There's not reward between here and here if we weren't going to be able to chop through this area here, and so the risk is to come back down quite a bit. So there's no trade for me here, and that's how you should look at a lot of your other trades, and that's why it's really important to draw those support and resistance lines and trend lines so you get an idea, a picture to assess what your risk versus reward is. So this is the 21-day moving average, I believe. No, the 50. So we'll see where she goes. I'm going to draw a line here. I strongly suggest you do on your charts as well. This is kind of a zone. You see that tall wick there. You know, it came up into this supply area and got slapped down. Made the dip, and the volume came in. Traders came in, wanted to buy the dip, and pushed it right back up. But this is the area where personally I would put my stop loss in here, or at least consider getting out. Um, you know, hopefully you got in before this, and so you would still get out with some profit. The the higher in price that you get in, you know, if you try not to FOMO, but the higher in price you get into a trade like this, even with this, you know, excellent specimen of a chart on a trade like this, you've got your catalyst, your news, it's a previous runner, it's a low float. All the elements are there for this thing to go higher and to make money, but it has to keep its strength. There has to be some continuous volume, even though the volume down here it's a lot less than it is over here. It's because we're in after hours, so you're not going to get a lot of the trading. These are going to be a lot of retail traders, and but the price action, the movement will still be there. So, but if you didn't get in until, you know, maybe this area here, or you know, if you're lucky down here before the break, then the closer you don't want to use this as your stop loss. You may want to consider your stop loss somewhere up here because you want to book profits. No one ever went broke taking profits. Got to book your profits, and because you got in late, if you did, then you need to take profits. Otherwise, if you wait for it to get here and keep telling yourself, well, maybe it'll bounce off the VWAP. Well, maybe it'll bounce off the 200. Now you're in the hole, and break even. So be disciplined, be smart. Um, you know, you got to remember that the hedge funds, all the people that are against the retail traders, they want you to tell yourself that. They want you to hold. They want you to hodl because I haven't seen a statistic, but I would like to know how many traders we have lost since 2020 when the market started to rally, because I'm sure you'll find that it's an enormous amount of traders out of the market, and it's one of the reasons why there's a lot less volume too, less traders trading. So let's see if this candle pushes up. Let's take a look. This is the 1 minute, so if you see something like this here on the 1 minute, you really need to pull out. Let's look at the 5 minute. What does the 5 minute look like? And I'm just basing it off the lower wicks here. Here we go. We got to break 768. Once we do that, then we'll enter this kind of zone up here. And let's see how much volume comes in. I'm going to move this out to the 1 so we can take a look at the volume. Now, something else to keep in mind, even though on that wick we broke through, we've got to have candles closing above. That right there, had that candle closed or just like that, that would be an indecisive doji candle. Just meaning that the price action, almost a neutral trade. You got equal amount buyers and sellers that have come in and caused that candle to close that looks like that. So it's still pretty close to that. But with the strong candle push up, let's see what happens here. Keep in mind on the 1 minute candle, try not to make too many decisions based on that 1 minute. The larger time frames really help you see the bigger picture. We're still in the green here. Now, when this 5 minute candle closes, if it closes red, the chances statistically of it going lower increase. It might not be enough information for you to say that I'm cutting my losses here, but if it were a 5 minute candle that closed down here at VWAP in the red, then that would be my interpretation of a massive amount of selling that's going on, and that's why it's important to have your time and sales up over here. If a lot of selling is going on, then you would see it over here in the time and sales. And you can see when you see more red, the stick will go down, and vice versa for the green. The very low numbers are definitely traders under the PDT rule, retail, and they're just trying to get in on some after hours price action. They will likely hold on to those shares. They don't want to risk a lot of shares because they're probably having to hold overnight. They don't have any day trades left, or they don't want to use their day trade, but they want to get in on the price action. I'm sure we've all been there, but that's the psychology of these lower trades. Let's take the BFRI. BFRI, we'll come back to this in a minute. I want to see 773 break on a 5 minute chart. Candle needs to close above that. BFRI. Whew. This is not looking good. Trend is down for sure from the open high. Let's take a look at the daily. I mean, the trend is down here. You're reaching a point here. You know, when it broke this point at 166, there wasn't a whole lot to keep it from moving lower, and that's probably one of the reasons why it moved so fast down. What was it? 166. That was probably from yesterday. Let's take a look at 30 days. Yeah, this thing has just been. Now, if I remember correctly, this is a low float stock, and let me see what the short info is. BFRI. There was a lot of shorts in the late January coming into August, but the short percentage has dramatically dropped. It did pick up yesterday. No, I take that back. No, it's been very, very low the last couple of days. You know, a lot of the green that you might see here is probably shorts covering. You know, once the stock dropped below this level here, you probably haven't had many traders buying into it. Kind of been grinding away at this area. This is on the 1 hour chart. We would need to break at least past the 160 area in order to come back up, and because of the amount of supply in here, it's just going to be a tough grind back up there. So I would say for right now, I looked at this I think last week, watching it to see if it was going to reverse and push higher. I mean, really, nowadays all it takes is some news. So BFRI to report second financial results on August 12th. So in 3 days, you know, if a stock is strong and it has a lot of interest in it, and there's the potential for it to move a lot higher, you will see a week or two before earnings are reported, volume starting to come in. Let's take a look at Upstart. Perfect example. Let's do 20 days. I know people that have been in here since this either in here or back in here, but they bought it in anticipation for the run up in earnings. Actually, I think it's been more than that. 30 days. Here we go. Here's where they decided to get in because you've got a trend line. You know, here's your break in your trend line area. Boom, right there. So once they saw this broke and it closed up above, now this is on the 1 hour chart, but it closed above certain levels. 1, 2, 3, 4. You know, this thing went from 26 all the way up to 35. That's $10. If you bought the option contracts in here were dirt cheap. And if you bought 100 of those contracts for $5 a pop, you could have easily quadrupled your money in the run up to earnings here. So those are the kind of plays that we really want to look for. You know, so if anyone has time and you want to look ahead into next week's earnings and see if on the daily chart is there a trend that is close to being broken. And I'm talking about this kind of trend right here. Right there. Exactly the way I drew that line. Boom. If you see something like this and we've already started to curl and we're about to come up into that trend line again, and they have earnings next week or the week afterwards, that's the kind of play we want to be on watch for, because we would look to get in. We would just watch this. The moment that first day that candle closes above, you know, watch it in the afternoon, a few minutes before 5 o'clock. If that candle closes above, it's going to close green. Look at all that volume coming in. And what did that close at? 25.43, and we would close it out the day before earnings for a massive profit. I wasn't watching Upstart until the day before earnings release, and the earnings was not good at all. I mean, it was. I guess it could have been worse, but um, I don't think they 1 cent, of revenue, not good. In this market, it might be not terrible, but either way, there was a play there. Let's go back to AERC and see where we're at. We'll close this out here. Kind of trading side. It's starting to trade sideways a little bit. Let's see what the 3-minute looks like. I like to do 1, 2, and 3, 5 on these shorter time frames for these kind of stocks. And then redraw your line. Is it still kind of within a zone? It's still trading off of this 21. I believe it's 21. $50. That's the 50-day EMA. Starting to break down a little bit. Again, still on the 1-minute chart. And I've seen these kind of plays. The volume is still starting to really kind of drop out quite a bit. And when that happens, you can see we're in after hours, you're comparing current volume to previous volume in after hours. So while there was a lot of volume activity here, a lot of shares were traded. If I look up, I can see that there were, where are my numbers? It's not showing. Here we go in the millions though. So we can see 200,000 shares were traded. And here we had 60,000. So volume really starting to drop off. You're starting to get people, either stop losses are being hit or traders are just getting out of the trade. And now that we broke this trend line here, let's take a look at the 5-minute. Yep. So depending on how this candle closes, this trade might be done for a little bit. I think that with this news, previous price action, I think that it's going to have to at least come down to VWAP. You see how it's bounced off VWAP on the 5-minute throughout this whole trade. When you have, especially penny stocks, if you have an afternoon VWAP bounce on price action, you typically see an extended rally or an extended climb in after hours. Makes for a great swing trade, and this really has all the elements there for catalyst. Now, this right here, this arrow that just popped up, is it's actually an indicator that a friend of mine gave to me. On the 5-minute chart, this will have to be confirmed, but that's not a good sign. Oof, not good. Roblox reported. What was the other one that reported? Coinbase. Coming up. Coinbase will be interesting. You know, even though Coinbase had the breaking news with the BlackRock, the business with BlackRock to provide them with a portion of their investment clients a doorway, a portal into trading crypto. Even though that's fantastic news for the company, has it started generating revenue yet? And it's probably not enough revenue to see a big difference, depending on when the trading had started on that exchange, if it's even up and running. I haven't done any due diligence on it. Let's see. So Coinbase monthly transaction users at 9 million versus visible alpha analyst consensus of 8.3. So that's good. There seems to be more volume, more users than previously, but a lot. Here we go. Revenue 803, consistency. Okay, so it came in lower. We're starting to get revenue numbers coming in here. You will often see if a company, I've seen a lot of situations like this where companies are going to report bad numbers, and you see just a strong push because the algos that sift through the information at a lightning speed, as soon as they find keywords in these releases, it'll trigger a sell-off or trigger a buy. So now you're seeing, looks like some retailers come in, and sometimes this will trigger stop losses as well. So, and the purpose, I think that it's just my own opinion again. Companies pay other companies to push up the price so that when the bad news is released and the algos pick it up, the sell-off, instead of the sell-off starting here and ending, much further down, it starts up here. So you're looking at a $6 or $7 difference. So it's not as bad. All right, that's all I got, guys. Tomorrow is a huge, huge day, one of the biggest days of the year for the stock market, for the economy. CPI data gets released before market open. I think it's going to be 8:30 Eastern, 7:30 Central, and we will see if CPI data comes in at 9.2 or more, you will likely see a pretty big market sell-off. Now, lately, bad news has been good news. And so market makers and who knows who else might try to prop the market up and prevent it from crashing. But rumors and some economic data, not all, but some economic data like the price of oil. Oil makes up about 40% of the final CPI number, and oil has been coming down for a while. Right now, it's trading at $90. Closed earlier at a high of 92, dropped down to 89. It usually trades in $5 ranges. So, but again, the CPI data is outdated. It is a month old. So whatever it was trading at a month ago, let's take a look. CL, light sweet crude oil futures. What was it trading at a month ago? It was trading a lot higher, So if you could, even on oil, you can draw trend lines. So it's likely going to come in lower. If it comes in below 9, you'll see the market will push up because it'll mean that we have peaked out, topped and peaked at inflation, and there will be the not only will, of course, traders will jump in and make some trades, but the hedge funds will use it as an opportunity to push the market higher because you can imagine the phone calls that they get on a daily basis from all of their investors as to why their portfolios have lost 20, 30, 40%. There is an enormous amount of Wall Street hedge funds and groups of investors who have not performed very well at all this year. And if anyone has any questions about Bitcoin, if the Bitcoin is tied to the Nasdaq, to tech stocks, and so when one does good, the other does good. So if you've got any crypto that you're still holding on to, if the market CPI data comes in, if it comes in at 10 or higher, that's going to be really bad, because even though the Wall Street has tried to kind of BS, even on CNBC, on your business channels and stuff, they've kind of BS the market that for a while now they've been thinking that it's tapering off. We think we've reached the peak. We expect the next CPI data to come in lower, and so if it comes in at 10 or higher, which I hope it doesn't for the sake of the markets, but if it does, you're going to see a much worse reaction, and then Jerome Powell, the Federal Reserve, they're going to probably have to take a 1 point cut on interest rates, or increase 100 basis points on the interest rates. But we'll see. This market's been the opposite. Good news is good news, and good news is bad news. So there's no telling what's going to happen. But when markets open, once we see a direction, especially on the SPY, we might see a little dip before a rip, or we might see a pop before the bottom falls out. You just want to be patient. There's more than enough time once the market makes its decision, once the Wall Street digests the data, and pay attention to analysts. Even though for the most part analysts across the board have been complete morons and haven't been able to get anything right, you do have some of your old school analysts, and none come to mind right off the top of my head, but you'll start to see where they think it's headed after this, and the price action will show that in SPY. So I don't know how penny stocks are going to be affected by it, because from what I'm seeing, when the market is slow like they were today, you'll see an uptick in volatility and price action in the penny stocks, because you can make more money in that area, and vice versa. When the market is good and we're seeing a lot of volume come in and the bid being bought up, you will see less activity in penny stocks. There's a lot of money to be made in the options contract field. If you get in at the right time and the right stock, you can easily ride an upwards trend in the SPY up to past 417. I think we're down at 410, closed around 410, but there's a lot of money to be made out there, and we'll see what happens in the morning. I'll try to be on and streaming, just to kind of I gather a lot of data at overnight from a lot of different sources, and just try to condense it down to get an idea how are traders going to trade one direction or another depending on where it goes. No one knows. uh, I would think that Wall Street has enough knowledge and can pull enough data from different spots that they know where CPI is at currently, but this data is reported a month ago. So Wall Street probably knows not only where we're at now, but also where we're going to be 2 and 3 months down the road, which is typically the stock markets usually they're forward looking. And so they will typically see at least 2 to 3 months ahead, depending on what the issue is and what events are going on in the world. They can sometimes see 6 months ahead. And the market starts to price that in before before these dates, these times right here. Is a 10-point CPI data release, is it priced in right now? I don't think so, but I certainly don't work on Wall Street either. So that's why sometimes you'll see some of the bad news, bad numbers will get reported, and if that data is already priced in, if it's bad news and the market already dropped by SPY dropped 10 points, then it might already be priced in, and so we just trade sideways until more data comes out. We shall see. Save your day trades if you're under the PDT rule. Be smart, ask questions. Today, AERC, if you're able to get in on it, it was a good trade. It was a good Jaeger. Thanks for posting that in there. Let's see what AECR is at right now. AERC 727. There, bounced off. I think my Benzinga is behind. But anyways, this looks good. We bounced off, and even though volume is very, very low, we might not see this move up much higher than this until tomorrow. Everyone's waiting for CPI data. So good luck, everyone. I'll see you all in the morning at the latest, and take care. Be safe out there.